So as we like to do, we like to spotlight an asset class. In this case, and as has been the case for the last 3 or 4 months, we're spotlighting U.S. equities. It's come as a surprise to many of the advisors we've spoken to over the past several weeks that U.S. equities, and on the screen here you see the total stock market index expressed through an ETF VTI, has actually entered into what is technically defined, or by the textbook is defined as, a correction. A correction is defined as a decline from a high to a subsequent trough of greater than 10%. And that's what we've seen here in September, really starting from the high made on the first trading day of September to the end of the third week in September. We saw about a 10% decline from high to low. Now we don't typically use that terminology, correction. Correction implies that it must go back up, that it's incorrect if it goes down. We don't believe that. That's a bad way to manage risk, in our opinion. But sometimes clients like to hear the same terminology from you, the advisor, that they're hearing from CNBC or reading on Yahoo Finance. And so it is interesting to point this out and maybe relate to a client, especially if you're a current Blueprint partner, and to say that, look, while we've had a 10% correction, that has not generated a trend change inside of the Blueprint portfolios.